guys, welcome to becoming a Forex trader. This is the second video of the channel and this is the continuation of the previous one. If you haven't checked the previous video, just go in the link on top and check the first part because you won't understand what we're gonna do right now. All of this that you've seen on the screen is the explanation of the last video. We were talking about market structure. So just to summarize, in the last video, I told you how to identify the market structure, how to identify the zone, which is the area that we're looking to buy or to sell, depending the market structure. Wait for the price to reach the zone. And in this video, I'm gonna show you what's the conditions to look for the entry, okay? So as you remember, if you saw the last video, if not, go to the link. The last video we were recording until here, that was like 2 or 3 days ago. And this circle here that I show you, that I point in the last video, is the price reaching the zone in this bearish market structure. So how are we gonna take the entry? So the first thing that you need to understand is that the price reach the zone is not a guarantee that you're gonna place a trade, okay? Wait, little bit dust in the camera. So it's not guarantee that you're gonna be taking the trade. You have to wait for the conditions to happen. And what are the conditions? Well, first, I want you to remember or to understand that we always gonna check for two things. One thing is time frame looking for direction. So what's the time frame looking for direction? In this case, what we did in the last video, the time frame that we are using to look for direction is the 4 hours. So it's the 4 hours time frame, which means that every candle is 4 hours of information, okay? This time frame, we only use it to identify the market structure, the point 1. I want you to remember that. So the point 1 in this case is the 4 hours time frame. What we're looking for in that time frame is to identify if the market is bullish or if it's bearish. And in that case, if it's bullish, we want to look for buying. If it's bearish, we want to look for selling, okay? Never sell on a bullish market and never buy on a bearish market. You can do it and maybe you can make some money even though, but the idea is to put the probability on our side, you know? It doesn't make sense that if the market is bullish, it's going up, you try to sell. Doesn't make any sense. Of course, there's some kind or some type of traders that they specialize on taking those retracements, but this is not the case, okay? One thing that I want you to remember is that there's not one strategy better than other. There's no such a thing. There's many strategies that work. It depends more on the trader than the strategy, okay? Different strategies require more patience and another require more accuracy, okay? In this case, I like to use the 4 hours time frame to identify the direction because the structure is very easy to read, or is easier than maybe smaller time frames, and the structure is way stronger. What I mean with way stronger is that when you reach a point where it's a support or a resistance, if it's a 4 hour time frame, the support and the resistance is way stronger, is more respected than if we go to the 5 minutes or 50 minutes or even half an hour of 30 minutes time frame, okay? Or 2 minutes, of course. So the lower the time frame, the less strong, let's not say respect, the less strong is the support and the resistance points, okay? So I just want to let you know that to understand why we're using the 4 hours. So 4 hours is for direction. We already have the direction. Of course, I'm explaining this trade because it was the one that I explained in the last video, but I can tell you these ones as well. So once the price, you know, higher low, lower low, this is a bearish structure. The 20 EMA, exponential moving average, is going down. So it's another confirmation that we are looking for selling. Bullish market, bearish structure, bearish market, bearish structure, and the moving average is going down. It's a very good confirmation that we are looking for sales. Okay, so in this point I have the higher low, lower low. We identify the zone, price get back to the zone. Once it touches the zone, what we do is to reduce our time frame to look for the entry. You know, remember the 4 point. Once in the zone, go to lower time frames for entries. In this case, we are going to go for the 5 minutes time frame. That's the time frame that I use most of the times to identify a possible entry. Remember that a possible entry, not a guarantee entry. No, a possible entry, and I will explain you now why. So if you remember, this is the circle that I pumped before. So this is where the price touched before. This is where the price touched before. Let me just lock this to don't move it. So this is where the price touch the zone. This line here is the zone. Okay, so when the price go there, I already start looking for the 5 minutes time frame and see what happens with the movement of the price. And what's the thing that I'm looking for? There is a pattern that you need to understand and memorize forever, and this will change your trading forever. How do we know that a market structure is bullish or bearish? Just to make a quick reminder. So this is basically, I will explain in a second, just give me 1 second. Okay, so this is basically how the market moves. Of course, I'm doing it in a bullish market, turn into a bearish, but the other way around it works exactly the same. So remember, when it's a bullish market, bullish is that it's going up, going up, looking for buying. So when it's bullish, going up, we are looking for buys. And the bullish market, it's composed, or the important parts of the bullish market structure is the higher lows, higher highs. Once it breaks this line, so I'm gonna put this example. When it breaks the higher high, it's breaking here, we wait for the price to reach the highest point, and then when it starts coming back, we identify that as the new higher high, and the lower, the following or the previous lower point becomes the higher low. Yes? And now we are looking to move this line as well, which is where the market breaks up for a new bullish structure. So now the new higher high is gonna be here. That's correct? So everything that happens between here and here is just market structure in this area. Everything here is market structure, market structure, market structure. The market continues being bullish. Yeah, I'm just gonna delay this to not confuse anything. Once it breaks here in this point, we wait to the price to reach the highest point again, and when it's coming back, we already identified this as the new higher high, and the previous lower, it becomes the higher low. Okay, now what happened at some point, and this is what we're gonna be masters on understanding, at some point the market is not gonna give you a new higher high anymore. Okay? So when the price is not giving you a new higher, when the market, is not giving you a new higher high anymore, because it's not crossing this higher high area anymore, is because something is happening. Something, it might happen, which is changing from a bullish structure to a bearish structure. It's not guaranteed, it's possible, but it's the first sign or the first clue that you might have to prevent or to anticipate a possible change of structure. Okay? I want to tell you something that you keep in your mind, guys, is that nothing is guaranteed in the market. Okay? Nothing is 100% sure. Nothing is 100% bet guarantee. Nobody can predict the future of the market. If that were the case, people wouldn't lose money on Wall Street, but they lose money as well. But they make more money than they lose. That's the key. Everyone lose money, or no. Everyone has to have losing trades. That's this business, how it works. This business works like that, and there's nothing you can do. Doesn't matter how much experience you have, you will continue having losing trades. Now, the fact that you have losing trades doesn't mean that you are not profitable. You still are a profitable trader. The point is to make more money than what you lose. That's simple. So in the market, again, it's not a guarantee, but it's what happens most of the times. You want to do what happened most of the times. So we have the higher high, higher low going down. This is the retracement, looking for the zone, for example. This will be the zone. If you don't know what I'm talking about, go to the previous video. And now, as the previous structure, we might expect that this break here, yes, to become a new higher high. That's what we are expecting, but it's not. It's not doing it, you know? It means that this is still the higher high, and this is still market structure. Everything inside here and here, between the blue lines, is market structure. So only two things can happen, and is the price is gonna break above the higher high, or it's gonna break below the higher low. What happened if it breaks above? It's a new higher high, therefore a new higher low. Okay? But what happened if it breaks below the higher low? Then we have a change of market structure, and the market from bullish start going to bearish. Is that clear? So higher high, market structure, market structure, market structure, market structure, market structure, boom, it breaks here. So now what can we call this point here? What can we call this point here? Pause the video and think. We talked about that the previous video. Give it a try. Just think. What's the name of this point? Of this point here? Is breaking under the higher low. Okay? Is breaking under the higher low. What's the name of this point? Just give it a try. Pause the video. 10 seconds, and we continue, because this is the main. This is the DNA of the market. And this is the DNA of any market, not only Forex, but stocks, crypto, commodities, whatever. This is the real understanding behind technical analysis. This is 100% technical analysis, because we take decisions based on what the market shows us. That's it. We don't take decisions based on understanding a company, who is the CEO, the news, etc. It's another kind of trade, completely valid. I'm not talking bad or saying it's bad. No, I'm just telling you this is my approach, and this is what I'm teaching you. So, okay, what's the name of this point here? it's breaking below the higher low, so it becomes, because now it's a bearish market, it becomes the lower low, the lower point in a lower structure, and therefore the previous high will be this one here, okay? But it's not a higher high anymore, it's a lower high, sorry, lower high, because now it's going down. Is that clear, guys? So if we divide this until here, for example, just to put an example, we divide this until here. Yes, wait, sorry, until here, here. If we divide this, we can tell that everything on this side, wait, let me just configure this. We can tell that everything on this side was still a bullish structure because it's going up, yeah, and everything on this side becomes or start going as a bearish structure. Does it make sense? I want you to think if this makes sense. Why this is bullish if there is no new higher high? I told you, because you come with this structure. This is the higher high, this is the higher low. Everything inside there is market structure, but still the general structure is the one that comes with it, the previous one. So is the bullish. This is bullish until it breaks below the higher low. Is gonna continue bullish. Okay, it has to break below to change the structure, and most likely is gonna make a retracement to the previous structure point and continue going down. I want you to understand this. This is very important. If you understand this, I guarantee you already have the hardest part on this business, which is understand how the market move. Now, another clue, but we're not gonna talk about this in this video, but just to give you a clue, another way to identify that we have a possible, remember, it's always in terms of possibility, it's not guarantee. Nothing in the market is 100% or 0%. No, it's about possibilities. Everything, anything and everything can happen. So when you have a moving average, in my case, a 20 period exponential moving average, it's gonna look like something like that. Okay, I'm sorry for the drawing, not the best, but I want you to understand the concept. The concept is when the market is moving up, is a bullish market, so all the green area, most likely the moving average is gonna go up as well. In the moment the market doesn't produce any new higher highs, but market structure, is because it might be getting ready for a change of a structure, and you start looking that the moving average is getting kind of flat. It's not inclined anymore, it's getting flat because it might start going down, you know. Once you identify this kind of phenomenons or events, you might start thinking, okay, this might be an opportunity to change the structure. Okay, I want you to tell me if this is clear or not. I mean, ask yourselves. I don't know how to talk with you through here, but ask yourselves, is this clear for you or not? This is so important. This applies for any time frame. This applies for understanding the time frames, the 4-hour time frames when we look for direction, and it's going to apply now to show you how to identify the entry. Okay, so if this makes sense, let's continue for the entry. we're gonna use the same drawing because I think it's great. I think it's clear, and that's what I need, that is clear, the concept. So if we go to the 4 hours, 4 hours structure, oh my god, too much zoom. Where are we? Here. Sorry for the mess, sorry for the mess. I will make it up for you. Sorry for the mess. We were here. This is where the circle was. We have a bullish, bearish, sorry, we are going down, bearish structure. We wait for the price to reach the zone. It's in the zone now. Now we zoom in and we do this. But what I want to remind you is that we are in a bearish market. We are looking for selling only. We are looking for selling only. Okay? So if we are looking for selling only, sorry, I'm a big mess, sorry guys, but I know you are understanding the point. We are looking for selling only. So what happened? We are in a bullish, in a bearish structure, but when the price reach the zone area, it's because it's going up, right? Because it's coming like this. This is the higher, lower high. This is the lower low. This is what we are looking in the 4 hours time frame. What I'm drawing here is the 4 hour time frame. 4 hours, just 4 hours. This is what we're looking in the 4 hours time frame, and the zone is this area here, is this point here. So for the price to start going to this way, from here to the lower low to here, it has to go up, right? Because it's making a retracement. I have a lower high, I have a lower low. The lower low is the lowest point of the structure, and then it's making a retracement to the possible area where we're gonna look to sell. In that way, if everything goes alright, we're gonna continue going short, and we're gonna earn the income in all this drop. Okay, it's not guaranteed that we're gonna sell. It has to happen what we want to happen. Remember, you set the conditions. Don't trade under the market conditions. You have to trade under your conditions. So what I want to understand is that even though we are in a bearish structure, to reach the zone, the area that we are looking, interested to sell, or to look for a selling, the price has to be going up because it's a retracement. And the same way, the other way around is the same. If the market is bullish, to reach the zone, it has to be going down, right? In the lower time frame, in the 5 minutes one. So I want you to keep that in mind, okay? So I have this one here, this one here. So now, if this is the 5 minutes, now this structure that I just draw to you is the 5 minutes. Is the 5 minutes time frame. This structure is the 5 minutes time frame. Okay, remember that. This that I draw you here is this. Is exactly this. What we are looking here. The price reaching the zone. Remember, this yellow line is the zone. So even though the market is going down, in the 5 minutes it's going up, because it's making a retracement to the zone. So it's going up. If I draw the lines here, it's gonna be like this. I will change the color in a second. Ta 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 ta. I want you to remember this. Even though the market is going down in the 4 hours, in the 5 minutes is going up, because it's making it's going all the way back to the zone. Okay? Remember, if the price don't make the return to the zone, the price doesn't make the return to the zone, We do nothing. We do nothing. We only sell or buy in the areas of our interest, and that has to be our rule. At the end of the day, trading is about looking for confirmations, and you have to wait that those confirmations happen in order to put your money in the market. You have to set your conditions. Don't trade with the market conditions. If you don't have a plan, you don't have a business. Remember that. You have to take this as a business. If you take it as a hobby, it's gonna be a hobby. That's it. It's not gonna be a business. So, if this is the 5 minutes structure, yes. If we are looking to sell in a bearish structure market, but the 5 minutes it's going up, is bullish in the 5 minutes, what do we have to wait to happen to put our order to sell, to put our money, to look for shorting? What does it have to happen in the market structure? I want you to think about it. Think about that. What has to happen? Remember, this is 5 minutes. I'm gonna put it bigger because I don't want you to forget it. This is a close-up to the point that I just showed you in the market structure. What has to happen for us to put our money? I want you to try to use your common sense. If you don't know, just try to think a little bit. I will tell you in a second, of course. But try to guess, because this is very logic. This is very logic. Okay? So, if we are looking to sell, the best thing that we can do is to wait for this transition. Why? Why? If we want the price to start going down from the zone, what time frame needs to go down first? The 5 minutes or the 4 hours? Which one has to go first? Oh, wait, I have a call, guys. Wait a second. Let me just mute this. I called you back. So what market is gonna go down first, the 5 minutes or the 4 hours? It has to be the 5 minutes because it's happening first. Okay, it's shorter period of times. Okay, if the market in the 5 minutes time frame is going up and we're looking for sell, don't ever think to put your money in any of these points. Doesn't make any sense. Okay, you have to wait for this to happen. Oh shit, what happened? Oh shit. Oh, where are we? Oh, it's here. Yeah, I don't know what happened. Sorry, guys. You have to wait for the market to make the transition in the 5 minutes time frame to then sell. Where you gonna put your order? You have to put your order here. Once you break the lower time, let's put the letters of the previous one. Oh, sorry. So remember, this was the lower high, no, higher low, sorry. This was the higher high. Sorry guys, this wasn't lower high, it was higher low. This is higher low, this is lower high, and this is the higher high. Yeah. So remember, we have this structure here. Yes? We are waiting to the market to go to the zone and looking for buys, but it's not breaking on top of the higher high. So market structure, boom, 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 and then suddenly it breaks below the lower high. Yes? Comes back and then continues. This point here is the one that you need to look for. This is the golden point. This is the golden ticket. I'm talking bullshit. There's no such a thing like a golden strategy. But this is the more logical spot where you want to put your trade. Okay, so you already know that on this side, after the line of this vertical line is bearish. Just I need to delay this for a second to explain the next thing. And this side is bullish. So let's just put this way is going up, this side is going up, and this side start going down. Okay, this is the 5 minutes. Remember, is where we're looking for our entry. We already know the market structure is bearish, but this is for looking for our very specific entry. Now the question is, where do we put our stop loss? What do you think? What do you think we have to put our stop loss? So remember, just to summarize, I want to make this clear. The golden point that you are looking to enter your target, to enter your trade, is when it breaks below the lower high, it breaks, you let this drop to develop to create a lower low, and when it comes back, which in this case when it breaks, this is the higher low, this is the lower low, and this will be the zone. This will be the zone in the 5 minutes time frame. You see how the market repeats itself? What we did in the 4 hours to identify the direction, we are doing it exactly the same to identify the entry. Because the market, it moves like a cycle, and that cycle repeats in every single time frame. If you understand that, you are way ahead of everyone up there. Okay, so if you have the higher low, lower low, because already break this below lower high, so it's making a change of structure. It was going up, now it's going down. Once it makes the comeback, and this zone, which it matches the last structure point, you know, and the moving averages start going down as well, you have many confirmations. So you have now breaking, it's breaking below the last lower high point. Change of structure, because it break, there is a change of structure. Because there is a change of structure, now we are looking for the zone. The confirmation of the 20 periods moving average, it's going down. What other confirmation? Structure point is touching the last structure point, which is what we call the zone. Okay, this is how you want to play this game, having a plan, having confirmations, putting the odds on your favor. Okay, so if you have this scenario, you can put your entry in that area. Yes, and the stop loss, you're gonna put it a little bit above of the highest point, you know, of the highest point. Why? Because it might happen that this is a more temporal breaking as well. You know, if it's a temporal breaking, it might do something like this. I'm gonna put it in yellow. It might do something like this, and then maybe retake the shorting. Okay, but what happened if you put your stop loss very close here? One of those movements that they happen very often, they might take your money. So why you want to put it on top of the highest high point that you have in that switching area? Because you want to make sure that if the market hit your stop loss, is because you were completely wrong. You know, I mean, which can happen. I told you, you can have all these confirmations and still lose money. but what you are doing is to put the odds on your favor, and that's what it matters. Okay, so if the market reached this point here, it's because maybe it's gonna start going up again, and that's fine. You know, as I told you, there's no way to know that. You only can play with the rules and with the confirmations that you have. Now, if this is the stop loss, where should we put our take profit? And that's where the game becomes beautiful. Always set your stop loss based on your entry time frame, but always set your take profit based on your 4 hours time frame. In the time frame that you look for direction, you set your take profit, and in the time set where you look for the entry, you set your stop loss. So I'm gonna show you this in this. Now we can go here. This is the trade that I took. And look, you're gonna cry with me. I guarantee you that. We have a market structure. It's going up. It's going up. It's going up. Oop! It's not creating new higher highs. Still there. Still there. Oop! A low and another low. Another low. And finally, as you can see, it reached the lower point. Let me just put an example on this. The market is not gonna move as beautiful and perfect as the way I draw it in here. This is a very beautiful, perfect drawing, very geometrical, but the market is not gonna do that, but the concept is the same. I have a bullish structure, and I'm waiting that it breaks the lower point, which is this one. So the lower high here, lower high. This will be the higher high. Oh shit. Wait. So higher high will be this one. Sorry, this one. Oh shit. Cannot move this. Yeah, okay. So this doesn't make much, it's not too hard to understand. It's the lower high, higher high, it breaks, so this is the new higher high, therefore this is the new higher low, lower market structure, it breaks, higher high, lower point, it goes down. If you can see here, this price here went a little bit above. You see, this is the higher high, but this one went a little bit above. I count those subtle changes as well as a new higher high. If it went above with the body, if it's just with the tail, I don't count it. Okay, so higher high, lower high, higher high, market structure, and boom, in here it breaks. Put 2 points here. It breaks. So this is the lower low now. Therefore, this becomes the lower high. No, higher low. Shit. Higher low. And the higher low is here, which means that I'm looking for which point? This one here. You see the point, the golden point I'm looking is the last market structure, which is here. I'm sorry, I have so many lines. I know. Sorry. I'm a mess. I'm gonna clean this up. So I don't know if you can see that it's exactly the drawing that I show you. Not quite perfect, but you can see boom, 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 break, and I'm looking for the retracement to the golden point. This will be what I told you, the golden point. Yes, and then effectively continues going down. It breaks below, lower low, and this becomes the higher high. In that point is where I put my entry. As you can see, my stop loss is above to the highest point. And another confirmation is that the 20 minutes 20 period moving average is going flat at this point. Of course, I didn't know at that point that it was gonna go this high again, but that's okay because my stop loss is here. You see, it's on top of this, doesn't matter. So as I have my stop loss here, I can chill, you know, I can chill. Sorry, that was a fly. I can chill. I let the market do this thing because in the 5 minutes it's gonna do like this, up, down, up, down, up, down. And now the take profit, you're gonna take it. This is the beauty of this game. The take profit, where are we? Too many things doing at the same time. I'm sorry, I'm a mess. I promise I won't make more videos in this mess, but I didn't want to delay what I did from the last video because I want you to understand. So this is the 4 hours time frame. I'm gonna delay this. I hope you have understand this because I want this to make the screen to be clean. No, this is a mess. We cannot work like this. So yeah, just like that, delay this. That was what we draw in the 5 minutes time frame. So this is the structure that I draw in the 5 minutes. I'm gonna delete it. You already have my entry, which was on that point. But if you remember, the market structure here was, this was the higher high, sorry, the higher low, and this was the lower low, right? So what normally happens in a market structure, when you have a higher low, lower low, go to the zone, normally what happens after go to the zone and continues with the normal movement? It's gonna go below the lower low. So I always put my take profit on the same point of the lower low. Why? Because I already hit the zone, and now even if it doesn't make a lower point, which is the case, it didn't. Remember that when the market is going to swap, they hit the same point couple times. 1, 2, this one didn't hit the lower low again, but then they break on top, above, and now it's a bullish structure. But my point is, even if it doesn't create a lower point, let me just put it with drawings, it's easier. Pa, touch the zone, so higher low, lower low, touch the zone, and what I'm hoping is that it goes lower. But even if it's gonna make a change of a structure, and I'm wrong, it's not gonna create a lower low point. To change the structure, normally it takes the same point and then start changing subtle way, in a subtle way. Okay, so this is exactly what happened. You know. Now, I want you to understand this is a 2.65 win ratio or risk to ratio reward, which is the risk ratio reward, which means what? Which means that if I'm risking, if the risk is $100, yes, $100, and my risk ratio reward in this case is 2.65, it means that is $265. Does it make sense? If you take all your trades like this, for example, in this change of a structure, I took this one, this is a 2.5 risk ratio, 2.05 risk ratio, and this one was 2.53. Yep. So this is this will be equivalent to $205, and this will be equivalent to $253. Yeah. In each entry, I'm only risking $100. So let's assume the worst and the best scenario. The worst case is they lose the three trades. Oh wait. So look, I'm gonna make this simple so you can see it. So 265 plus 205 plus 253, that's 723. And in this case, if you lose everything, is $300. That's how you want to play the game. If you lose everything, which is not impossible, of course, everything is possible, you're gonna lose $300. But if you win everything, you're gonna make $723. Okay? You want to play the game like this, always making more money if you win than if you lose, otherwise it doesn't make sense. And this is just the risk radio reward. Another factor that you have to understand is the win rate. Win rate, which is basically how many times you win. If you take, for example, 3 trades and you win the 3 of them, you have 100% win rate. But let's say that you only won this one and you lose 2. Yes, let's say you win this one, let's put it on green, and this one's on red. Shit, sorry guys. This one on red, this one on red. If that's the scenario, let's say you win the first one and you lose the other 2, you have 200 negative here. Yes, because you lose these 2, so 200 on red, and you have 265 on win. So you have a win rate of the 33%. Yeah, you will have a win rate of the 33.3%. And still be profitable. You will be $65 on the PNL. Okay, so you will be winning $65, winning just a third of your trades. That's how you want to play this game. Don't take it as a game starting for this point. Take it as a business. That's how you want to run this business, taking control of your risk. But I'm gonna make a new video for that topic especially. The only thing I want to show you is that if you trade like this, if you look for your entries like this, you always gonna risk way less than when you possible or potentially might win. So check, and the last check here, we complete the 4. That's how you want to trade, guys. You want to make sure you have a very clear plan. If you don't have a plan, you don't have a business. If you don't have a business, it's just gambling. Yeah, and gambling doesn't last. So guys, that's it for this video. I'm sorry if I make it longer than expected, but I really want to make sure you understand this, because this is gonna change your trading, regardless if it's Forex trader or you are a currency trader, a stock trader, of your options, of your commodities, of your crypto. Market structure moves the same regardless the element, you know, it moves like a wave. Remember that moves like a wave, goes up but it goes low, goes up, goes down, goes up, goes down. It cannot stay up forever, it cannot stay down forever. So if you understand that, the only thing that you need now is practice. And that's the thing, I can show you this and you can watch the video many times, but if you don't practice it, nothing's gonna change. I'll be doing some psychological videos as well, because the trading strategy, the market structure, and all these kind of things, the technical analysis. Look, if you are a new trader, you have no idea of anything of this. In 1 month, you can learn everything, the concepts, even in a week, if you put enough time. But the psychology, you have to pay the price. You have to build experience, and you have to put your time in front of the charts to make sure you develop that skill, that ability to understand the market structure just by looking the charts in 1 second, and to understand this is a very emotional business, because it implies money. You have to control your emotions. If you are not the boss, if you don't control your emotions will control you, and you don't want that. If you are that kind of person, think it twice before starting trading. Or if you know that you cannot learn that ability, think it twice. You might not have that ability, but you maybe are a person that are used to follow the rules, to be very, very correct with a person that keep your word. When you say I'm gonna do something and you do it, that's the kind of things that you need in this business, because it's about keep it real with yourself, stick to the plan, don't improvise, and to learn. At the end of the day, everyone can trade, but not everyone becomes a trader. And there's two different things, completely two different concepts. Yeah. Anyway, guys, I hope you have enjoyed the video. If you like it, subscribe it, just share it. Try to share it with your friend who's starting with the trading. I hope this video make it easier to understand how the market works. And remember, I have a new Instagram account. I just started a new Instagram account. If you want to follow, that would be great. In that way, we can grow this community together, and I can continue adding some value if you find some. So thank you guys for your time, and I see you on the next video.